Earlier, no, remuneration to working partner. Earlier, remuneration to working partner is restricted to 1,50,000 or 90% 3 lakh. Now, up to 3 lakhs book profit is there, right? That is increased to 6 lakhs. Anyhow, when I'm discussing that concept of 40B, there I will cover that point. Okay, fine. Let's revise the entire PGBP revision with crystal clear understanding with illustrations also. Certain illustrations. Illustrations means not the IC illustrations or something. I will give customized illustrations here. If you understand that illustrations and the concept which I'm revising, that is enough, more than enough. You can solve any kind of problem in the exam. That's it. And we all know charging section is what? 28. You know, in PGBP, the most important thing is 1 minute. So in the PGBP, the most important thing is having an idea on the structure. The PGBP is structured into 4 parts. Okay, 28 and 41. These two sections are talking about what incomes are taxable under PGBP. 29, okay, let me not cover this, okay. 28 and 41 talks about incomes. Then we have sections from 30 to 38. 30 to 38. These are the sections which are talking about deductions. Then we have sections called 40 to 43B. These sections are talking about disallowances, they call it as. People generally call it as disallowances. You know what I call it as? Conditions for these deductions. What are they? Conditions for these deductions. Conditions for these deductions. Indirectly, if at all you do not comply with this condition, this deduction you will not get. That's why it is called as what? Disallowance. Then finally, we have some administrative provision called 44AA, 44AB, 44ADA, 44AE, 44AD, presumptive taxation, books of accounts, and audit. And you know what? There is a section called 29, which says that entire income under PGBP shall be computed. Entire income under PGBP shall be computed by taking reference from 28 to 43B. By using all these sections, you should compute PGBP. This is the structure of the PGBP. Getting it? In the PGBP, many students do wrong problems. Like in the sense, they do wrong answers. The only reason they do not understand how to apply the disallowance logic. And you know, 15 marks compulsory question will be there. That is generally based on PGBP. 99% of the cases, the question 15 marks question will be based on this PGBP. So PGBP is such an important topic, and it is easy also. It's not complicated. It's very logical. Just if you understand this logic, if a P&L account is given, how to do the problem. If receipts and payment account is given, how to do the problem. If you understand the decoding, if you understand that logic, that's more than enough. Getting it? You know, now let me straight away proceed. Now, what is the charging section PGBP 28? In charging section, nothing much is there. In charging section, there is one important element according to me. That is conversion of inventory into stock inventory. What is it? Conversion of inventory. Conversion of inventory into capital asset. Conversion of inventory into capital asset. This 9th clause you see. 9th point. Conversion of inventory into capital. Remember, it's not vice versa. Conversion of capital asset into stock inventory comes under capital gains. Conversion of inventory into capital asset is PGBP. Yes or no? Now, so if at all inventory is converted into capital asset, suppose I'm a jewelry shop owner. I have a jewelry which is actually inventory, but suddenly my wife likes one model. She wants to take it and use it for personal use. She took it. Now what happened? My inventory became my personal property account. Capital asset. It is treated as sale. It is treated as sale. In PGBP, the conversion how much income you should show it under PGBP? Fair market value of inventory on the date of conversion. So that's what you should show it as income. And this jewelry item you might have purchased at some price earlier. Fair market value minus purchase minus business profit or business loss. That's it. Able to understand? Same way, sometimes our capital asset that is converted into PGBP. See, when you're converting this into capital asset, you are calling it as selling price. When that is converted, when capital asset is converted into PGBP, you are bringing into business. Means it should be recorded as purchase. It should be recorded as purchase. At what value? Same. Fair market value on the date of conversion. If capital asset is converted into PGBP, capital asset is converted into PGBP. That item becomes inventory. What is the purchase price for the inventory? Market value on the date of conversion. In the capital gains chapter, the same market value is treated as full value of consideration. For the purpose of computation of capital gains under 45 section 2. If you recollect, under capital gains 45 section 2, the capital asset transfer into stock in conversion is not taxable in the year of conversion, but it is taxable in the year when I sell the stock in business. Now in PGBP, what is the business profit on this converted capital asset into stock in? What is the business profit? Sale price plus or minus, and sale price minus market value of the conversion. Market value on the date of conversion from capital asset to stock in. That is called again business profit or loss. You will understand. You will understand. So that is one important point. The entire charging section. Rest of the points in charging section, whenever it is necessary in the revision, wherever it is necessary, I will come back to it. Now, what is the method of accounting in PGBP? Remember, for other sources of business or profession, you should maintain account records. There is a section called 44AA, which we will discuss little while later. That section says if you satisfy certain parameters, getting it, you must maintain. Simple. In that section, 4 categories of assets has to maintain accounts. 44AA section says 4 categories of assets has to maintain accounts. So what are the 4 categories of assets? We will come back to that later. Getting it? Now, what is the method of accounting? Very simple. How are you maintaining books of accounts? Accrual. In PGBP also, computation shall be based on accrual. Suppose you can maintain books of accounts on cash, then in PGBP also, books of accounts shall be maintained on cash. Just 5 minutes. Yes, sorry. So, if the books of accounts are maintained on accrual, PGBP income was calculated on accrual. If the books of accounts are maintained on cash, PGBP income was calculated on cash basis. Okay, now, remember in PGBP, when we are discussing incomes and expenses, sometimes they will use the word paid, or sometimes they will use the word payable. Paid or payable should be interpreted in context of method of accounting. Suppose the word used is paid, don't think that it is actually paid. Okay, if it is accrual basis, in PGBP, income is taxable on accrual, expenses are also, deductions are also given on accrual, except 43. Except 43B payments. In 43B, 7 types of payments are there, 7 or 8 types of payments are there. Those deductions you will get only if you actually pay. And remember, 43B section is applicable only for the SSC following mercantile basis of accounting. Okay, fine. I'll come back to it. So, this is the PGBP related method of accounting. And in 145B, specifically 145B, if at all you are getting any subsidy, grant, any other from government for your business or profession, that is taxable only when you receive it, irrespective of your method of accounting. Your method of accounting, method of cash or cash, government grant, when the government declares the grant, that time not taxable. Only when you receive it, taxable. Same way, if you are getting any interest on compensation or interest on enhanced compensation related to transfer from capitalist, generally that interest amount is taxable on other sources. Get the point? Straight away the interest is taxable under other sources. 145B has addressing two issues. One is interest on compensation. Interest on compensation is directly taxable under other sources. And we discussed in our class, flat 50% reduction is available. What is it? Flat 50% reduction is available. That's it. And suppose no, if the SSC is having multiple businesses, the SSC is doing cotton trading, rice trading, manufacturing, iron and ore, getting it, and you're also having a software company, like some 5 to 6 times business SSC. For each business you should compute income separately. At the end of the computation of all business reports, combine it, you will total income of PGBP. Getting it? That's it. Now there is something called income computation disclosure standard, which is not relevant to CBM. ICBS standards are applicable for an SSC who is liable for who is following mercantile business. Who is following mercantile business. Remember, individuals PHs who are having business but not liable for audit under 44AB, they are exempted from ICBS. MCQ, this is important. Getting it? They might test it under MCQ. That's it. This is introduction to the PGBP, which is more than sufficient. Directly. You know, we have something called speculation related discussion. This entire we will be covering in second and fourth division. Okay. Now, what are the various deductions? First deduction is what I told you, right? Entire PGBP. See, incomes are covered under 28 and 48. What are all incomes taxable under PGBP? Very simple. If you are getting any amount related to business, it is taxable under PGBP. You able to understand? So, incomes, there is no need to learn specifically what incomes are taxable. Very simple. You are doing manufacturing, sale of goods. You are covering services, sale of services. You're providing any additional warranty on whatever income you're getting from that knowledge tax level PGBP. Now, what expenses you can claim under PGBP? What expenses you get? What deductions you get? Deductions are covered under 32, 38, actually 37 only. 38 section says, if at all any deduction, if at all any expenditure you spend that is used for both business and personal purposes. Only business related portion you should claim. Personal related portion you should not claim. That is what where it is 38 section says. So 38 section is not deduction section. 38 section is clarification. 30. First deduction section. What is this first deduction section saying? This deduction section is saying deduction for building expenses. Remember, building expenses, building related expenses. Now, what are the deductions? Suppose, sir, I'm a tenant. So, what expenses are for building? Rent I will pay, sir. That is allowed. Sir, here the word used is paid no, which means cash based. No. Getting it? If at all SSC is following accrual basis, paid means paid. Getting it? Remember, all the deductions under PGBP, you will claim deduction on accrual basis if at all you are declaring income under accrual. If your books are account accrual, in PGBP, each and every expenditure, each and every deduction is only on accrual. Accrual means what? You incur. However, there is a section called 43B where 7 types of payments are covered. These 7 types of payments you will get deduction only on cash basis. Rest all of expenses are accrual, and inside that 43B, rent is not covered. Therefore, rent, the word paid means what? Rent incurred. That's what the meaning. Suppose the SS is calling cash value of account. The SS is calling cash basis. Then the rent must be paid by 31st March. Only then the expenditure will be less. Deduction cash value of account means what? From 1st April to 31st March. See, for you, the problems will be based on 1st April 2024 to 31st March 2025. May exams, exams also. January 26 also. The financial year which will be paid in exams 24-25. In that year, if you receive money, that is in that year if you pay money, that is deduction. That is cash value of account. Yes or no? Now, then another expenditure, repairs. Repairs expenditure is allowed as deduction. Remember, it must be borne by the tenant. Other tenant might sometimes pay what? Property taxes. He might also pay what? Insurance. He might incur some expenses. They can also be claimed as deduction. And remember, repairs. They say repairs, right? Which kind of repairs are allowed as capital nature? Sorry, revenue nature is allowed. Repairs of capital nature, they are not deductible. Repairs of capital nature. Suppose I am a tenant, sir, I have taken a building rent, I incur some capital expenditure on some renovations. What should I do? I cannot claim deduction. You should create a block to it. You should create a building stock. Getting it? And then add that into the building stock. Suppose if it is interior work. Suppose you put a building on it, you put interior work. Interior is generally coming under furniture. Getting it? You add it to the block of the section 32, you claim depreciation. So if repairs of capital is incurred, they are not deductible. They are added to block, and depreciation can be claimed by the SSC. Next up. Premises partly used for business and partly used for others. Very simple. Sir, the building which I am using for business, that is also used for other purposes. What shall we do with this? Very simple. Claim proportionately. Getting it? Business purpose only you should claim expenditure. If at all some expenditure is being enjoyed in other purposes also, being enjoyed by personal purposes also, don't claim deduction. Yes or no? Sometimes in problems they'll give you like okay, let me go to this point also. Sir, SSC is one of the things. Rent alone will not be there. Rent expenditure alone will not be there. Rest all expenses will be there. Municipal taxes you might be paying. Insurance expenditure is there. Everything else is there. Remember, property taxes they are subject to 43B. Able to understand. Now, there is one more expenditure. With respect to building, you might have borrowed some loan also from that. Interest on loan related to building. The interest on loan is covered in section 36. The interest on loan is covered in section 36. It is not covered in section 30. Able to understand? That is also building related loan. Remember, any interest expenditure paid on after the building is produced. On after the building is produced, the interest expenditure related to that period on after the building is produced is a revenue expenditure. You should not add it to the value. You can claim deduction section 36. And remember, interest to banks and financial institutions is subject to 43B. Interest to banks, interest on loans borrowed from banks and default is subject to 43B. 43B means what? That expenditure you will not get deduction just on accrual. You should actually pay by due date by payment and other section. Yes or no? Now, in problem they'll give you some example. They are given one problem. Like yes, he has house property. In the house property, 50% is used for business, 50% is used for 50% is used for residential purposes. Municipal taxes, repairs expenses they all give you. In house property, repairs, insurance, all that you will do. In house property, for 50% portion you directly claim 50% of the NAV. Whereas in PGBP, you should consider the repairs, you should consider the insurance, actual expenditure. How much proportion? Whatever is used for business, that much actual only you should consider. Whereas in house property, you are actual. You start claim standard deduction. Remember this point. Getting it? Same way, municipal taxes paid. 50% is for house property, 50% is for business. In house property, you will get deduction only if it is paid. In the 31st March before. Whereas in PGBP, municipal taxes paid on or before due date for filing, vehicle under 139 section 143 up to that you can claim. Able to understand. That's it. Next. Coming to next one is what? Missionary plant furniture. Very simple. Any repairs and maintenance incurred on this. Any repairs and maintenance furniture incurred on this plant furniture you can claim deduction. Sir, I lease this plant furniture. What about the lease amount? What about the rent amount? You can claim deduction section 37. You can claim deduction section 37. Because section 31 is silent on lease rental amount of plant furniture. Suppose for my business purpose, I took plant furniture upgrade. What should I do? You can claim deduction section 37. Able to understand. Next. So repairs and maintenance. Yes, expenses used for business. Usage includes as usual. Passive usage means sir, I purchase machine. I just tried it. It's installed. Just switch off. It will start working. It is ready to switch on and start working. It is ready to use it. You need not actually use it. Getting it? That's it. Remember, repairs that which kind of repairs are allowed in only current repairs, only revenue repairs. Capital nature are not deductible. They are added to block. Now for insurance, for plant insurance, now you will be incurring some insurance expenditures. Deduction is allowed for insurance premium paid. Deduction is allowed for insurance premium. Income is allowed. Getting it? That's it. Then this point is satisfied. Okay. Major it's 30 months. Two deductions will complete. Now the next major deduction is 30.
So that is rent and repairs for buildings and buildings and other assets. For buildings, rent and repair for buildings. So it must be actually incurred and it must be actually incurred and payment on the payment condition will 43 condition. So 32 on the repairs for plant and machinery. So plant and machinery gonna repairs which is of a revenue nature. Capital nature ka repairs and maintenance will be added to the block of assets and we can claim the depreciation on the same. Next one at the same time insurance paid and the direct insurance paid on the such plant and machineries or any other assets will come under section 31.
So depreciation. Major deduction. What? Depreciation. Remember, depreciation is mandatory to reduce from the block of assets. Compulsory should reduce. Well, you should claim compulsory depreciation. You should also reduce the depreciation under PGBP. Very important. Most important. Depreciation is the most confusing point where 90% of students do wrong answers. And they're completing the test. Very simple. In PGBP, depreciation is calculated based on block of asset approach. Depreciation is calculated based on block of asset approach. However, for power sector, who is engaged in generation or distribution of power, any entity is engaged in power generation or power generation, distribution, whatever they have in the first year of business. For them, in the first year of business, they can either choose SLM, asset wise, or they can use WDV method, block of asset approach. This option is given to them only in the first year. Only in the first year. First time they are claiming depreciation under income tax. They can claim on SLM as well. Once they choose this, forever, the power sector has to go with SLM method only. For that, depreciation is given under depreciation rates are given separately. For power sector, SLM is depreciation rates are given separately. There is something called appendix 1, depreciation rates. Okay, so one appendix is applicable for block officer reports, another appendix is applicable for SLM method. That's it. Now, suppose now the power sector says, no, sir, we don't want SLM, we go with block officer report. Then, if they choose block officer report in the first year, the same they should follow forever lifetime of the electricity companies. Be able to understand. Now, remember, electricity companies, there is something called additional depreciation. There is something called additional depreciation. Additional depreciation is eligible for whom? Manufacturing entities, power sector. Power sector, additional depreciation they will get only when they follow block officer reports. If they follow SLM, they don't get additional depreciation benefit. Yes or no? That's it. No, sir, what do you mean by block officer? Very simple. In income, block officer means one or more assets, two or more assets, falling under same category and carrying same rate of depreciation, same percentage of depreciation, same category. Income tax, thumb rule, the categories are only four: intangibles, buildings, furniture, plant and machinery. Any asset you buy, suppose I got a computer, suppose I got books, suppose I got air conditioner, I got a mobile phone, I got a car. All these items are not intangibles, they are not buildings, they are not furniture. So books comes under plant and machinery, computer comes under plant and machinery, motor car comes under plant and machinery. So they are all plant and machinery. And see what is the rate applicable. See what is the rate applicable. You know, for that, no, don't remember all the rest. I will tell you what rate should be remembered. You know, most important is entirely speaking. You see, for example, building. Now, what is the rate of depreciation for intangibles? Straight away 25%. Blocks. Rate of depreciation what? Straight away 25. Buildings. Suppose no, if the building is used for residential purposes, staff quarters, residential premises, 5% is the rate. Suppose the building is not used for residential, factory, official purpose, office purpose, 10%. Suppose the building is a building structure, then 40% is the rate of depreciation. Suppose it is a furniture, the rate of depreciation is 10%. Remember, furniture, all furniture should come under one block. Buildings, no, 5% buildings all that should come under one block, 10% buildings should come under another block, 40% buildings should come under another block. So within buildings you have three blocks. Then coming to plant and machinery, you know, in plant and machinery, entire totally 5 blocks only possible. Plant and machinery 30% block, plant and machinery 40%, plant and machinery 40, plant and machinery 20. Many students confuse here. They will think it is a computer block, books block. No, it's a plant and machinery 40% block. What are all the assets eligible for 40% depreciation? Assets eligible, no, renewable energy devices 40%. Computers, including computer software, even computer printers. Printers are also eligible for 40%. Books, whether annual, professional, doesn't matter. Your purchasing books, it is 40%. Pollution control equipment, airplanes and engines, life-saving materials, they all come under 40% blocks. You should call them as only plant and machinery. Very good. So, if you know, the problem is you just see purchases. So and so, you know, computer, books, airplanes, all that. You should include them in one block. Like how to compute depreciation block, we'll come back to it. Just 2 minutes, we'll come back to it. Then remember, if energy devices, if at all they are installed before April 2014, then it is 50%, 99% they won't test it. Then cars, motor cars. What is the depreciation rate for cars? Motor cars generally what's the rate of depreciation? 50%. Suppose the car is purchased between 23rd August. The car is purchased between 23rd August to 31st March 2020, which is actually generally not required. Mostly they won't give this one, 50%. Generally, if the car is used for taxi purpose, hiring purpose, renting purpose, depreciation is 30. Sir, I bought a car not for renting, sir. I bought a car for my private purpose, my office business purpose, sir. Then rate of depreciation is 15%. Suppose in this list, no, mobiles is not covered, air conditioner not covered. They all come under one category. Any other plant industry, they all come under what? 15%. You able to understand? That's it. Now, so this is block. So block officer. Now, what are they saying here? Block officer. So what do you mean by block officer? Yes, sir, falling under same category, carrying same rate. You should divide them into block, single blocks. Now, how to compute depreciation on this block officer? This is the question. You know, this condition will tell you when I will open depreciation format. You know, you in income tax under section 32, when you should calculate depreciation. 31st March of the relevant previous year. The year begins on 1st April 2024. Year ends on 31st March 2025. You should calculate depreciation on 31st March. You should calculate on 31st March. On 31st March, you will calculate depreciation with two conditions of section. One block exists. One condition is what? Block exists. Another condition is what? WDV exists. What is it? WDV exists. Written down value also exists. Block must exist. Inside the block, WDV must also exist as on 31st March. Sir, what do you mean by WDV? Many students think that WDV means after reducing depreciation closing. No. Closing WDV after reducing depreciation is different. WDV of the block is different. WDV of the block is what? You know, I will show you right now. You know, this is the format. Suppose you see this is the depreciation computation format. You should follow. See, I have given you how you should present in the exam also. I have given you how you should calculate normal depreciation, how you should calculate additional depreciation. If you follow this format, in 99.99%, no, 100 out of 100%, you will get the right answer. You will get the right answer if you follow this format. Now, what is the WDV of the block? First, no, opening WDV of the block on first paper. Sometimes when you're solving a problem, no, they will tell you WDV as on 31st March. Many students, what do they take it as opening? No, wrong. WDV as on 31st March. If at all the problem says WDV as on 31st March, simply. They did not mention before depreciation, after depreciation, they did not mention. By default, it means before depreciation. By default, it means before depreciation. WDV as on 31st March 2024, they said. It's nothing but 31st March WDV of 2024 before calculating depreciation for 23-24. Suppose in problem they said very clearly, WDV as on 31st March after allowing depreciation. Then that is opening WDV for this year. Remember this point. Suppose in the question they said WDV, in the ICA instruction, these problems for the same name is used. You go and check. WDV as on 31st March means it's not after reducing depreciation, it's before reducing. If the question clearly says after reducing depreciation, then only you take it after reducing. Suppose no, in the question they get WDV as on 31st March simply. Now they are asking you to find out current year depreciation how much. What many students will know? They will take it as opening and they start calculating depreciation. Wrong. First give last year depreciation reduction. Then you will get closing WDV after depreciation of last year. That you take it as opening WDV. Then in the current year, how you should calculate depreciation in the current year? First identify what is the opening block value. What is the opening block value identified? For that you should have 4 items. You should have 4 items. Many things only 3 items, but there are 4 items to be added. 1. Assets. You should have what? Actual cost of. You should have what? Actual cost of assets acquired during the previous year. Actual cost of assets acquired. Maybe some students say assets acquired installed also. No, acquired enough. If you acquired, you add it in the block. See, for claiming depreciation installation conditions required. For adding in the block installation conditions not required. Many don't know this. For claiming depreciation only installation conditions required. For adding in the block installation conditions not required. Now you see here how you should assets put to use for less than more than or equal to 180 days. Assets put to use for more than or equal to 180 days. The cutoff date is 4th October of the previous year. Relevant year. Suppose right now your problem will be based on 24-25. If the asset is purchased and used, if the asset is purchased and installed before 4th October, straight away it is used for more than or equal to 180 days. Straight away is used for more than or equal to 180 days. If the asset is installed, see I'm not using the word purchase. If the asset is installed On or after 4th October 2024. Number of days from 4th October to 31st March is 179. Means the asset is used for less than 90 days. So in the problem they give you additions. Look at the date of installation. Sometimes in questions they don't give you date of installation. They only give you date of purchase. If date of installation is not specifically given, we assume that on the purchase date itself, asset is also installed. You have to understand. Yes. So assets purchased and installation date machine. Accordingly, you categorize assets into more than 180 or less than 180. Apart from that, you should also add a more. Sir, I also equate assets, but not at all installed. Not at all installed. It is not ready for use. No passive usage. That amount you separately add. Suppose if the SSE has incurred any capital repairs, if the SSE has incurred any capital repairs, we just discussed under 30th section. That also you add. Then opening value, add actual cost of the assets acquired and capital repairs incurred during the year. Add it. And what you will get, value of the block, which we call it as gross value of the block. Opening plus additions. Remember here I am going to discuss capital gains counter section 40. Getting it? Now, less from this what you should base. First you are calculating closing WDV of the block before depreciation. Remember in exam they don't use the word before and all. They simply use the word WDV of the block as on 31st March 2025, 31st March 2024. If they simply mention WDV as on 31st March, you should consider it as before depreciation. Unless they specifically tell you, you should not consider it as after depreciation. Yes or no? That's it. WDV. So how do I get WDV of the block? Remember, two conditions are there. WDV shall exist, block shall exist. This condition of discussion of WDV means what? This value must be there. This value must exist. This value must be positive. Only then I can claim depreciation. Only then I can claim depreciation. This value must be positive. Asset also must be there. This block should be there. Block is there. Value is there. Then I will calculate depreciation. If value is turning negative, the value is turning negative, for example. Why? Like you want us to gross block rate, so that what you should reduce, what you should reduce. Block is there, right? Inside some part of a block. Please use the word I use is part of a block, not full block. If at all full block is transfer. Transfer means sale, demolition, destruction, compulsory acquisition. Any reason. My depreciation lesson. No. Government compulsory requires. Or they were destroyed. I received insurance compensation. Or I sold them. I received sale consideration. Simply speaking, with respect to the assets belonging to this block, right? In this block, assets are there, right? Have you received any money regarding them? Yes. That money received, reduce. That money received, reduce. That too, you will reduce here. You will follow this format. Whatever I am telling, only if it is there. Part of a block transfer. Suppose, very simple. Look at this question. Already in the capital gains also I told this point. Getting in the capital gains also I am covering this point. Very simple. Sir, opening WDV they gave us an example, which is 10 lakhs, sir. Additions during the year, sir, which is 8 lakhs, sir. Getting it? Now, in this year, no, part of a block only sold. Part of a block only sold. Okay, sir, part of a block is sold for some 9 lakhs. Now, tell me, should this depreciation applicable? Yes. Opening plus additions is equal to 18 lakhs. Minus money received on part of the block. 9. Balance is 9. So, value is there as on 31st March. WDV is there. Block is also there. I will straight away go and calculate depreciation. Suppose, sir, I sold this part of the block for not 19, but 90 lakhs. Part only sold. 90 lakhs money. Sir, opening plus additions is 18, sir. If I reduce 19 minus negative means WDV block value can never be negative. It can only be 0. Then what about the extra one? You will straight away tax it as short-term capital gain. You will straight away tax it as short-term capital gain. If part of a block is sold, either short-term capital gain or depreciation will be. Sir, suppose no, sir, opening is 10 lakhs, sir. Additions during the year 8 lakhs, sir. But you know what? Full block is sold. Full block is acquired compulsory. Full block is destroyed, sir. I got insurance compensation 9 lakhs. I got insurance compensation 9 lakhs, sir. Now what is the tax equivalent? Very simple. Full block is sold. As of 31st March, condition shall be satisfied. Block must exist. Value must be there. WDV value must be there. Yes or no? Return on value must be there. Now, return on value 10 plus 8 minus 9. WDV value is there. But the block is not there. But the block is not there. When the block is not there, straight away section 50 you should apply. Straight away section 50. When section 50 is applicable, opening plus WDV 18. This much value of the block I sold for 9 lakhs. Short-term capital loss. If the amount received is less than, gross block value, short-term capital loss. If the amount received is more than gross block value, then the amount is called as short-term capital gain. Section 50 in case of full block. Part of a block. If the amount received on part of a block is more than the gross block value, straight away the extra amount is capital gain. If the amount received on part of a block is less than gross block value, then WDV value is there. You can still claim depreciation. Be able to understand. So here. So for money received on part of a block reduces. Here there is something point regarding some services. This is not satisfied. Okay, no problem. Okay. So this I think I already covered some solutions also. Capital gain, some solutions I already covered. So reduce it. Then what you will get closing WDV of the block. Now you should calculate. By the way, this is before depreciation. Now on this value you should calculate depreciation. On this value you should calculate depreciation. For example, I will do dummy numbers. Suppose I purchase it for 10 lakhs. Assets I purchase, which are used for more than 5 lakhs. I purchase for what price? 5 lakhs. Assets I purchase, but installed and used for less than 6 lakhs. And I also purchase assets which I have not yet installed for 8 lakhs. And you know what? Some part of the block is sold. Some machinery is related to this block. I sold. By the way, this is a 15% block. For calculation purpose, let us assume this is 15% block. You know what? I sold approximately almost this gross block value. How much it is? 18 plus 11, 29. Correct? Almost 29 is the gross block value. You know what? I sold approximately 14 lakhs worth of blocks. 14 lakhs worth of blocks. You know, this is case number 1. 14 lakhs worth of block I sold. Part only sold. What's the balance block value? 15 lakh. Now calculate depreciation. In exam, you should follow the same steps. Working note 1. What is working note 1? WDV of the block before depreciation. How much? Just now we computed how much it is? 15 lakhs. How much it is? 15 lakh. Now look at the answer. Say look at the point. First, allocate the value to assets bought but not used. How much in our example assets bought but not used? Assets bought 8 lakhs is there. Okay. Out of this 15 lakhs, no, 8 lakh I will allocate here. How much it is? 8 lakh. Then still how much is there? 7 lakhs. Then second you should allocate the value to assets used for less than or equal to less than 90 days. How much is the value is less than or equal to 6 lakhs is there. Okay, 6 lakhs I will allocate. This is how you should do allocation. Then balancing figure 1 lakh. Now what is the rate of depreciation? Here no, nil depreciation because the asset you purchase only but not installed. In the year in which you purchase the asset and not installed, normal depreciation you can't claim. But second year onwards you can claim depreciation on this because second year onwards it will belong to opening value. You can't find out this kind of break in the second year. That is why they say normal depreciation is not allowed in the year of purchase if the asset is not installed. Suppose if the asset is not installed in the year of purchase, normal depreciation is not allowed only in the second year onwards. Yes, why you can claim second year onwards? You don't claim separately. It is forming part of opening value. That's why you can claim. It is forming part of in the second year. They come under balance and figure it all there. Able to understand? No, 0. Now in current year 6 lakhs is there. 6 lakhs. Now what are they saying? Apply half rate on this value. Half rate means what? 6 lakhs into 15% into half only. How much is it? 45,000 is the depreciation. Then 1 lakh is there. Apply full rate into 15%. 1 lakh 15,000. Sorry, 15,000. What is it? 15,000. So total normal depreciation is how much? 60,000. Able to understand? Total normal depreciation is 60. Now if the SSE is engaged in manufacturing, he is also eligible to claim additional depreciation. In that case, working note 2 will be the part number 2. Depreciation is computed. See, this is working note 1. In this working note 1, part 1 computation is normal. We understood right now normal. Now, okay. Now we understand part 2. Don't worry, I will take one more illustration here. Part 2, additional depreciation, how to calculate. Additional depreciation, for example, in the problems I gave some machinery and machinery purchased during the year but not installed. Additional depreciation is 0. The second year also it's not installed, same 0. Third year is installed. That year you will get additional depreciation. Additional depreciation you will get in the year of installation. Sir, I installed, sir, easier. Machinery I installed, but use for more than or equal to 180 days. Then look at actual cost. Remember, for computing additional depreciation, WDV value is irrelevant. What is important? Actual cost multiplied by 20%. You will get some amount. Suppose if the machinery is used for less than 180 days, you will get 10%. Balance 10% you will get in the next year. When you're solving the problem, see whether in the before year, any additional depreciation is there, balance 10% is there or not. Check it. In the before year, getting it. Machinery A brought last year, balance additional depreciation to be claimed how much? Actually to 10%. That value. Remember, if at all any balance additional depreciation is there, coming which is belonging to the last year, getting balance additional, can you claim it currently? If at all you're following default tax regime, no. If at all the SSC is following default tax regime, getting it, you cannot claim additional depreciation. Remember that point. Okay, that's it. You calculate additional. Now, what is the total depreciation? Part 1 plus part 2. This value you should include here. Then you will get what? Closing WDV as on 31st March after depreciation. Are you getting it? Suppose that in this question, for example, this is not 14 lakhs, sir. For example, this is 20 lakhs, sale value. How the answer will change? Very simple. If it is 20 lakh, WDV before depreciation is how much? 9 lakh. So here, how much value is there? How much value is there here? Just a minute. So how much value is there? 9 lakh. Correct? So how much value is there here? 9 lakh. Now, anyhow, first I should allocate for what? The assets bought but not used. How much is the asset bought? 8 lakhs. 8 lakhs into 0% depreciation 0. Then yes, second allocate. Balance only 1 lakh is there. Here we have how much value? 6, but I have only value how much here? 1 only there. So 1 only I will allocate. Be able to understand. So 1 lakh multiplied by 15% into 1 by 2 is equal to so and so much. Balancing because your entire 9 lakhs allocated 8 here, 1 here. That's how allocation should be done. Be able to understand. That's it. This is how you should calculate depreciation. Easy. All of you. Now, additional depreciation. Who will get additional depreciation? SSC not following default tax regime. First point. 2. SSC not following default tax regime. Second condition. SSC must engage in manufacturing or generation of power or generation and distribution of power. Power sector is eligible provided only by the following block of asset. How much is the rate of additional depreciation? 20% of the actual cost you will get as a deduction. Further, additional depreciation is eligible only for new plant and machinery. Remember, we have given here itself. Additional depreciation is eligible only for new machinery or plant acquired and installed in the factory. Getting the point? If it is installed in office premises or residential premises, no additional depreciation. You will not get additional depreciation on any type of vehicle, roads, ships, aircraft, transport, nothing. You will not get additional depreciation if at all you are claiming 100% reduction on it. If at all you purchase any asset for scientific research, you cannot get additional. Forget about it. You can't do normal depreciation. If you purchase any asset for scientific research, that will not come under block. If you purchase any asset for specified business, capital expenditure, that will also not come under block. Yes or no? And second hand machinery, getting it, you will not get additional depreciation. What is additional depreciation? 20% of the actual cost. If the asset is put in for less than 180 days, you will get only 10%. Balance 10% will be claimed in the subsequent year. Easy or not? 32 is over. 32 is over. So entire matter is.
So the basic condition for claiming depreciation is there should be a block and there should be written down value. Block must exist and written down value must exist. So that is depreciation goes as such follows. First on the opening WDV, add a setup code. Put to use with acquired put to use with existing as unknown asset not installed, asset acquired but not installed. Next asset acquired record either sale either minus 1. satisfied. Not satisfied. The condition not satisfied. Such positive or negative should be considered as STCG or loss under section 50. Unit minus depreciation after depre-
SSC not following this category. Second condition, the SSC must engage in manufacturing and generation of power or generation and distribution of power. Power sector is eligible provided only within the block of sector. How much is the rate of depreciation? 20% of the actual cost you will get as a deduction. Further, additional depreciation is eligible only for new plant and machinery. Remember, we have given here additional depreciation is eligible only for new machinery or plant acquired and installed in the factory. Get the point? If it is installed in office premises or residential premises, no additional depreciation. You will not get additional depreciation on any type of vehicle, roads, ships, aircraft, transport vehicles, nothing. You will not get additional depreciation if at all you are claiming 100% reduction on it. If at all you purchase any asset for scientific business, you cannot claim additional. Forget about it. That will normal depreciation. If you purchase any asset for scientific business, that will not come under block. If you purchase any asset for specified business, capital expenditure, that will also not come under block. Yes or no? And second hand machinery, getting it, you will not get additional depreciation. What is additional depreciation? 20% of the actual cost. If the asset is put to use for less than 180 days, you will get only 10%. Balance 10% will be claimed in the subsequent year. Easy. 32 is over. 32 is over. So entire matter is given here. Entire matter is given here. Getting it? Remember, here I not only covered depreciation computation, I also covered section 50 capital gains computation also. I covered. Yes or no? No. There are few points. You will not get depreciation on land and goodwill at all. Getting it? Okay. Depreciation is allowed on spare parts and components also because they qualify for capital expenditure criteria. Plant and machinery definition includes ships, books, vehicles, scientific capacity, circular cycle rate, and T bushes, livestock, building furniture. They are all not plant and machinery. Remember, T bushes and livestock, they are not at all eligible for depreciation. Getting it? Then that's it. You know, remaining points are not that important. This understanding is enough for example of clear. Yes. Next. Now coming to power sector. Power sector, they are eligible to claim, deduction. They are eligible to claim terminal depreciation, balancing tax. Power sector, if at all following WD. For them, depreciation will be calculated on what basis? Depreciation is calculated on what basis? Depreciation is calculated on SLR. Even for power sector also, we will calculate depreciation only on 31st March. If the SSC still exists, generally we will calculate depreciation on 31st March. Suppose as on 31st March SSC sold. Opening date SSC, 31st March SSC sold. I am using the word SSC, not loss. Power sector, SSC is there. Opening value 10 lakhs. 31st March it is sold. At what price? 5 lakhs. 5 lakhs is loss. Don't call it as loss. Call it as terminal depreciation. So 10 lakhs is the opening value, sir. SSC sold for 15 lakhs, sir. Original cost is 20 lakhs. Original cost is 20. Okay. 10 lakhs for SSC sold for 15. No, 5 lakhs profit, sir. You call it as balancing charge. 41 subsection 2 balancing charge. It is treated as income under PBT. Sir, same opening value 10 lakhs, sir. I sold for 25 lakhs. Original cost is 20 only, which means you have a profit of 15 lakhs. Profit up to original cost 10 lakhs is taxable as balancing charge under 41 subsection 2 PBT. Extra 5 lakhs is the rate. You profit over and above original cost. That 5 lakhs is treated as short-term capital gain under section 50A. You will straight away treat it as what? Short-term capital gain under section 50A. Clear? Yes or no? That's it. Next.
Okay, case of power sector asset வந்து அதே மாதிரி தான் எஸ்எல்எம் பேசிஸில் அதாவது அசட் பேசிஸில் எஸ்எல்எம் பேசிஸில் இது பண்ணுறாங்க. இன்கேஸ் த அசட் இஸ் பவர் sector under SLM. First, if asset has WDV and asset exists, basic condition, which is a basic condition. Okay, if the asset is there, for example, gross value of asset, gross value of asset, gross value of asset இருக்கு, ஒரு amount இருக்கு, minus sale of asset. So for example, இப்போ gross value of asset வந்து ஒரு 10 lakh இருக்குது, சேல் வந்து 5 lakh வந்து சேல் ஆகிடுச்சு. ஸோ ரிமைனிங் 5 lakh வந்து ரிமைனிங் 5 lakh இது வந்து it will be considered as since asset is sold and no asset is available, will be considered as terminal depreciation. Okay, situation 1. இப்போ gross value of asset வந்து 10 lakh இருக்குது, இது வந்து 15 lakh வந்து asset சேல் ஆகிடுச்சு. ஸோ here it is a profit of 5 lakh. Profit அதே தான். This profit will considered as income under PGBP, AGBP as under section 41 to 41 to okay, same இது வந்து if asset value is 10 lakh and it is sold for 25 lakh. Okay, if asset value is sold for 25 lakh and the profit is 15 lakh. Profit more than WDV of asset. In such case, amount up to value of asset will be considered as income as under PGBP, ABP under section 41 to remaining 5 lakh will be considered as STCG under section 50A.
Capital gain under section 50A. Over and above original cost, the 5 lakhs is treated as short-term balance in charge under 40 of section 50. Extra 5 lakhs is the rate you profit over and above original cost, the 5 lakhs is treated as short-term capital gain under section 50A. Short-term capital gain under section 50A. Yes or no? That's it. Next. With this depreciation calculation is completed. Next, we will straight away proceed with the actual cost. What do you mean by actual cost? Remember, in depreciation block, you should add actual cost calculation. So, in recent January exam, there was asked for 3 or 4 marks question. Getting it? What is the actual cost? Sir, I purchased, some necessities there, sir. I purchased it for scientific uses first. After using that, I directly brought it to normal business, sir. Means I added it into the normal block, sir. And what value should I add? Actual cost minus deduction alone. Generally, it is leave. Getting it? Then, sir, I have my inventory, so I'm converting into capital assets. My inventory is there, right? Nothing, sir. Actually, I have a furniture shop, sir. I have a furniture, which is actually inventory. This furniture, no, I converted into my office furniture, which means I am converting my inventory to fixed assets. Now, how much value should I add in the furniture block? Market value on the rate of conversion. Remember, this point is given in the question, no? You should add in the block as well as you should also show it under sale. You should show it as sale value, 10 lakhs market value. The 10 lakhs will be added in the block also. Remember, what is the tax consequence? MCQ might come up, they might ask you 2 or 3 marks question. SSC has purchased, or SSC has some inventory for him. He converted into so and so. So, depreciation is set. Now, what is the tax difference? You should treat it as sale, plus you should also add it in the block. What value? Market value on the rate of conversion to capital asset. Remember, capital asset means what? In case of business, depreciation is also a capital asset. Yes. Sir, I got the asset as a gift or inheritance. I got the asset as a gift or inheritance. How much? How much is the cost of previous furniture? Minus notional depreciation reduces. Plus installation expenses you might have incurred when you purchase after installation. That and all you should add. No, cost to previous purchase.
ஒதுக்கி வச்ச ஓவியம் என்ன பொறுத்தவரை
10 lakhs, sir. He gets it. Now, 10 lakhs don't take it. Don't add every 10 lakhs. Then he purchased how many 31st March you see? How many 31st March you see? He purchased, I got it. No, how many 31st March you see? For each 31st March, on WDV basis, reduce notional depreciation. Whatever the rate of income of the asset, it is considered 40%. Other plans is very hard, 50%. So, for every 31st March, WDV basis, the rate of the WDV, that value is directly block of US. Able to understand? Easy. Next. Then, suppose, SSC transfer asset used for business. I am using for my business. I sold. Then I repurchased. Again, I repurchased. Very simple. What is the price of the acquisition? How much price you pay at the acquisition? You have actual cost, no? You purchased minus depreciation till the date. You sold away. Yes or no? Later you acquired it. Up to the sale date. How much is the depreciation? Original cost, depreciation up to the sale date. WDV value. WDV value on the rate of sale. Simple. WDV value on the rate of sale. Get it? Check out. Compare with the cost which you acquired. The rate is lowest. That is the actual cost of addition to the able to understand. Next, we already discussed this in the class. Again, logic circle like this. Okay. Then, sir, second hand asset is there, sir. Given on lease. Okay. Hire or otherwise to EV Sono to
ஒதுக்கி வச்ச ஓவியம் என்ன பொறுத்தவரை
previous owner means I gave. What is it? I purchased and I purchased. Actually, next morning I purchased. again I gave him list. I purchased it from him. I again I gave him back as list. Some tax related fraud is there to it. Now what is the block? WDB to the previous owner will be treated as the block as the. Getting it? What price you paid for purchasing from him? Don't that, because no, you purchase and give it as a list to him, which means there is some tax manipulation. So don't record a purchase price. WDB to him is how much. The same value will be treated as purchase price for you. Simple, able to understand. Next step, sir, I have a building. Sir. I have a building. I brought into business. My personal asset I brought into business. If it is building, original cost how much? Identify. Minus notional depreciation for every 31st March from the date of purchase of building till the date of bringing into business. Suppose I purchase the building 2020 in 2019 April. 2019 June I purchase the building. You know, I am bringing into business on 20th June 2024.
நான் ஏரிக்கர மேலிருந்து 8 தசை பார்த்திருந்து ஏங்கி ஏங்கி காத்திருந்தேன் காணல மணி 7 8 ஆன பின்னும் ஊரடங்கி போன பின்னும் சோறு தண்ணி வேணும் இன்னு தோணல என் தெம்மாங்கு பாட்டை கேட்டு தென்காத்து ஓடி வந்து தூதாக போக வேணும் அக்கறையில் நான் உண்டான ஆசைகளை சொல்லாம பூட்டி வச்சு உள்ளார வாடுறேனே இக்கரையில நான் ஏரிக்கர மேலிருந்து 8 தேச பார்த்திருந்து ஏங்கி ஏங்கி காத்திருந்தேன் காணல மணி 7 8 ஆன பின்னும் ஊரடங்கி போன பின்னும் சோறு தண்ணி வேணும் இன்னு தோணல நேத்து விதைச்சு வச்ச நேசந்தான் பூத்து கனிஞ்சு வரும் நேரந்தான் வாடாம போகாது வாடாதே பூந்தேனே சேராம வாழாது தண்ணீர செம்மீனே நம்மூரு கோட்டச்சாமி உன்னை என்ன சேர்த்தாச்சு என் ஜோடி நீதான் என்று என்றோ எழுதி வச்சாச்சு எப்போதும் சொந்தங்கள் போகாது செந்தாழ கத்தாழ ஆகாது நான் ஏரிக்கர மேலிருந்து 8 தேச பார்த்திருந்து ஏங்கி ஏங்கி காத்திருந்தேன் காணல மணி 7 8 ஆன பின்னும் ஊரடங்கி போன பின்னும் சோறு தண்ணி வேணும் இன்னு தோணல என் தெம்மாங்கு பாட்டை கேட்டு தென்காத்து ஓடி வந்து தூதாக போக வேணும் அக்கறையில் நான் உண்டான ஆசைகளை சொல்லாம பூட்டி வச்சு உள்ளார வாடுறேனே இக்கரையில் நான் ஏரிக்கர மேலிருந்து 8 தேச பார்த்திருந்து ஏங்கி ஏங்கி காத்திருந்தேன் காணல மணி 7 8 ஆன பின்னும் ஊரடங்கி போன பின்னும் சோறு தண்ணி வேணும் இன்னு தோணல ஊரார் ஒதுக்கி வச்ச ஓவியம் என்ன பொறுத்தவர காவியம் என்னாலும் நீ தாண்டி என்னோட ராசாத்தி பொன்னாட்டம் நெஞ்சோடு வச்சேனே காப்பாத்தி எங்கே நான் போனா என்ன எண்ணம் யாவும் இங்கேதான் உன் பேர மெட்டு கட்டி
போற மாமாவுக்கு கட்டிக்க போறவன் எப்படி இருக்கணும்னு கேட்டா இப்படி வைக்கப்படுறியே? அட சொல்ல மாமா.
என்னன்னு சொல்ல?
ஓ, யோசிக்கிறியா?
எப்படி சொல்ல? என்னவென்று சொல்வதம்மா வஞ்சியவள் பேரழகை, சொல்ல மொழி இல்லையம்மா கொஞ்சி வரும் தேரழகை, அந்தி மஞ்சள் நீரத்தவளை, என் நெஞ்சில் நிலைத்தவளை, நான் என்னென்று சொல்வேனோ, அதை எப்படி சொல்வேனோ, அவள் வான் மேகம் காணாத பால் நிலா, இந்த பூலோகம் பாராத தேனிலா, என்னவென்று சொல்வதம்மா வஞ்சி அவள் பேரழகை, சொல்ல மொழி இல்லையம்மா கொஞ்சி வரும் தேரழகை, அந்தி மஞ்சள் நீரத்தவளை, என் நெஞ்சில் நிலைத்தவளை, நான் என்னென்று சொல்வேனோ, அதை எப்படி சொல்வேனோ. தெம்மாங்கு பாடிடும் சிந்தவிழி நீங்களும், பொன்னூஞ்சலாடிடும் கன்னிக்கரும் கூந்தலும், புத்தாளும் மேடை பார்த்து வாடி போகும் பாத்திரை, முத்தாரம் நீட்டும் மார்பில் ஏக்கம் சேர்க்கும் தாமரை, வண்ணப்பூவின் வாசம் வந்து நேசம் பேசும், அவள் நான் பார்க்க தாங்காமல் நாடுவாள், புது பூ கோலம் தான் காலில் போடுவாள், என்னவென்று சொல்வதம்மா வஞ்சி அவள் பேரழகை, சொந்த மொழி இல்லையம்மா கொஞ்சி வரும் தேரழகை, அந்தி மஞ்சள் நீரத்தவளை, என் நெஞ்சில் நிலைத்தவளை, நான் என்னென்று சொல்வேனோ, அதை எப்படி சொல்வேனோ, அவள் வான் மேகம் காணாத பால் நிலா, இந்த பூலோகம் பாராத தேனிலா. கண்ணோரமாயிரம் காதல் கணை வீசுவாள், முந்தானை சோலையில் தென்றலுடன் பேசுவாள், ஆகாய மேகமாகி ஆசை தூரல் போடுவாள், நீரோடை போல நாடு மாடி பாடி ஓடுவாள், அதிகாலை ஊற்று அசைந்தாடும் நாற்று உயிர் மூச்சாகி ரீங்காரம் பாடுவாள், இந்த ராஜாவின் தோளோடு சேருவாள், என்னவென்று சொல்வதம்மா வஞ்சி அவள் பேரழகை, சொல்ல மொழி இல்லையம்மா கொஞ்சி வரும் தேரழகை, அந்தி மஞ்சள் நீரத்தவளை, என் நெஞ்சில் நிலைத்தவளை, நான் என்னென்று சொல்வேனோ, அதை எப்படி சொல்வேனோ, அவள் வான் மேகம் காணாத பால் நிலா, இந்த பூலோகம் பாராத தேனிலா, என்னவென்று சொல்வதம்மா வஞ்சி அவள் பேரழகை, சொல்ல மொழி இல்லையம்மா கொஞ்சி வரும் தேரழகை, அந்தி மஞ்சள் நீரத்தவளை, என் நெஞ்சில் நிலைத்தவளை, நான் என்னென்று சொல்வேனோ, அதை எப்படி சொல்வேனோ.
Problem 2009, 2020, 31st March, 2021, 31st March, 2020, 31st March, 2023, 31st March, 4th, 31st March is there before I bring it to business. For 4th, 31st March, reduce notional depreciation. Now, moreover, if it is a personal building, you might have used it for residential purpose. You might have used it for residential purpose. Then 5% depreciation. Suppose if you that building earlier you're renting it for commercial purpose and all, then reduce 10% notional depreciation. You able to understand. Then you add it as a block. Suppose no, in the last January exam, this question was asked. Suppose sir, other personal asset brought into business. I have a personal car, sir. Now I'm bringing into my business, sir. What price? Directly actual cost. You see, don't reduce notional depreciation. Symbolically, how I give minus notional interest and I don't stroke off because you should not reduce notional. Directly actual cost. You able to understand. Then sir, I borrowed loan, sir, relating to asset purchase, sir. Interest expenditure is the rate up to date of put to use. That should be capitalized. From the date of put to use, interest amount will be the rate on the loan outstanding. Claim it as reduction under section 36. Remember that, sir, when I'm purchasing the asset, no GST amount and all is there, sir. I'm a registered person under GST laws. Input tax credit is available, sir. To the extent of input tax credit, don't add it to the block. Over. Yes or no, sir? Grant I got, sir. Central government or state government or somebody else, sir. Actual asset price is 10 lakhs, sir. But I incurred only 2 lakhs, sir. I incurred only 2 lakhs. 8 lakhs somebody else incurred. Then you should add in the block only 2 lakhs. Able to understand? Then this specified business point and all is not that important for us at CA level. It's not required. But in regular class we discuss this very in-depth logically. Yes or no? How this point will come all that. But briefly once again I'll cover this point. Once I'm covering 35 AD. Able to understand? All of you. That's it. Rest of the points are not required. Carry forward and set off depreciation. Nothing but unabsorbed depreciation was all that we will straight away discuss in setup and carry forward revision. Now it is not required. We will discuss in setup and carry forward revision. Yes or no? That's it. Depreciation is completely done. Able to understand? Then section 35. Section 35.
Okay, that's
Deduction for scientific research expenditure. Deduction for scientific research expenditure. Remember, under section 35, you will get two types of deduction. You know, deduction where you are directly incurring the expenditure. Deduction for SSC where he is directly incurring the expenditure. Deduction where you are giving as a donation to other entities. Deduction towards donations, contributions to others. You know, if you are giving deductions or donation, if you are giving contributions or donations to Scientific Research Association approved, Indian Company for Scientific Research approved, Social Research approved, National Laboratory University in IIT and all approved. If you are giving donations to these four categories of persons, you will get 100% deduction only under optional tax regime. You will not get deduction under default tax regime. However,
contribution to research association, which has an objective of undertaking scientific research. Okay, notified research association, Indian company with main objective to scientific research, notified Indian company, notified research association, notified Indian company, notified research object with social science or technical university colleges, notified laboratory or university or IIT. Okay.
of persons, you will get 100% deduction only under optional tax regime. You will not get deduction under default tax regime. However, the scientific research expenditure, I am only directly spending, sir. Many students confused. If you are directly spending, you will get deduction. Many students interpret section 35 is not eligible for default tax regime. Wrong. 35 subsection 1, 4, 1A eligible. 35 subsection 1, clause 2, clause 3, clause 3, 2A. This is only not eligible under default tax regime. Directly expenditure is incurred by the SSC. You can claim. You know what you can claim. You know, revenue expenditure you can claim. Not a big deal. Capital expenditure also you can claim. What you can claim? Capital expenditure also you can claim. You see here. Capital, just a minute. Capital expenditure also you can claim on scientific research. Whatever research expenditure you spend, fully you will get deduction except land cost. What you will not get deduction? You will not get deduction for land. Getting it, sir? No deduction for cost of land. However, building cost is also deductible. Now remember, if at all any asset you purchase for scientific research, it is not eligible for depreciation. No block of asset. It should not be added in the block. When this asset will be added in the block from scientific research, I directly look into normal business purpose. Then I will add in the block. At what value will add in the block? Explanation 1 to 43 subsection 1. Actual cost. Actual cost minus deduction claim under 35. Deduction claim is equal to full 100%. So nil. At nil price you will add. Able to understand. Now, so capital expenditure. Sometimes I will incur expenditure on scientific research before starting the business. Before starting the business, I will incur. What about the previous? Before starting the business, if I spend some money. That year business is not there, no. So I spent the money, but I didn't claim deduction anywhere. In the year in which you started business, no. Whatever last 3 years. Remember, last 3 years revenue expenditure, last 3 years capital expenditure. Whatever is there, claim it as deduction in the first year in which you started the business. When you are claiming deduction for revenue expenditure for past 3 years before commencement, only the salary and material cost is allowed as deduction. Once you started the business, again you are incurring scientific research. No type of expenditure, no limit on type. Any expenditure you incur, scientific research allowed. Revenue, capital, both are allowed. Able to understand. All of you. Now, sir, scientific research purpose I purchased asset. No, I removed it. No, removed it means what? Either you might have sold it to somebody or you might have transferred it to your normal business. Suppose, sir, I sold it directly to somebody, sir. I purchased an asset for scientific research purpose, sir. I sold it to somebody directly, sir, without using it for some other purpose. I sold it directly, sir. How much amount you got? How much amount you got? First check out. Sale proceeds, how much you got? Or how much deduction you claim under 35 UC. Sir, I purchased scientific research for 10 lakhs, sir. Earlier I claimed deduction 10 lakhs, sir. Now I sold it directly, sir. Directly sold. Remember the words directly. Directly sold means what? I didn't take it to normal business. Directly from my research and development department itself I sold it, sir. How much you got? 5 lakhs you got, sir. Whichever is lower. How much is taxable? 5 lakh. Where it is taxable? 41 subsection 3. It's treated as a deemed profit. Suppose, sir, I didn't sell it, sir. I transferred it into block. I use it for normal purpose directly. Then in the block I will add it at 0. That asset I sold from the block, sir, at 5 lakhs. No tax treatment on that here. You will reduce the 5 lakhs from the block value because once an asset is forming part of the block, it will lose the identification of scientific research asset. Once you transfer scientific research asset into block, it will lose the identification of scientific research. It is now part of the block. When asset is sold in the part of the block treatment you will apply. 30 to 50, all the logics will apply. Yes or no? That's it. So that is what I meant. Suppose if the asset is brought into normal business, the same will be added to the block at nil, which is explanation 1 to 43. Indirectly there is no re-taxation. Yes or no? That's it. With this 35 is also over. Then we have 35 AD. 35 AD. You know 35 AD talks about what? You know, capital expenditure for specified business. Sir, I am doing specified business, sir. What about revenue expenditure? Revenue expenditure, anyhow you can claim 30, 31, 32, 36, 37. Revenue expenditure you can claim as usual. 35 AD specifically drafted for which deduction? Capital expenditure deduction. Suppose, sir, I am following default tax regime, sir. I will not get 35 AD deduction. Yes or no? If the SSC is following default tax regime, will he get 35 AD deduction? No. 35 AD deduction he will not get means which deduction he will not get? Revenue expenditure, capital expenditure. Capital expenditure. Yes or no? Because 35 AD talks only about capital. Sir, if 35 AD section is not there, sir, what is the consequence? Every capital expenditure is eligible only for depreciation. Revenue expenditure as usual, 30, 31, 35, 36, 37 as usual. 35 AD specifically talking about what? Capital expenditure. Now, if at all you are starting any of these 14 businesses, I'm not repeating this list. Okay, you take care of it later. If at all SSC is doing any of these 14 specified businesses in the
2-star hotels or higher, hospital with 100 beds, developing building house for some slum redevelopment, affordable housing, producing fertilizers, inland container depot, beekeeping, production of honey and UX and honey, warehousing facility for storing sugar, setting up and operating warehousing facility for storing sugar, salary pipeline for annual semiconductor wafer fabrication, manufacturing, developing manufacturing infrastructure facility.
These businesses, he is incurring some capital expenditure other than land, other than goodwill, other than financial instruments. You are incurring some capital expenditure. Don't claim depreciation. Claim 100% reduction for capital expenditure. That is what 3580 benefit is. Getting it? To encourage investments. So if at all I have to encourage investment means I should give deductions, investment linked. This section is also called as what you know, investment linked deduction. This investment linked deduction, capital expenditure related deduction section is not applicable when the assessment is falling which regime? Default tax regime. Yes or no? Until now DTR, additional depreciation you can't claim. 3580 contributions, donations, 35 you can't claim, contributions and donations. 3580 capital expenditure you can't claim. Sir, what about revenue expenditure for specific that you can claim? That's a normal business expenditure. Yes or no? Next, what is the amount of reduction? 100% reduction on capital expenditure incurred. Sir, not only current year, sir. Before I started this business itself, I started constructing hotel. Getting it? Past 3-4 years, I'm constructing hotels, sir. What about that? That expenditure incurred before commencing the business? No. That time you incurred expenditure. You didn't claim reduction anywhere. By the way, which expenditure I'm talking about? By the way, capital only. Under 3580, we are only discussing about capital. Revenue expenditure, no problem at all. You can claim under respective sections. Yes or no? Now, before commencement of specific business, I incurred some expenditure. What about that? You can claim deduction in the first year in which you started the business, provided only one condition. Whatever expenditure you incurred, no, please capitalize it in your books of accounts as on the beginning, first April or beginning date of the business. Capitalize it. Then you claim deduction in the current year by filing IT return. Able to understand. Now, again, when you're incurring any capital expenditure, no, if at all you're making any payment exceeding 10,000 in other than cash, cross check, bearer check, you will not get deduction for that capital expenditure. Same point is there in depreciation also. In depreciation, what is the subsection? What is actual cost? Actual cost is not purchase price. However, if the amount paid is more than 10,000 by other than cash, nothing but if the amount paid is by other than prescribed modes, other than prescribed mode means what? Cash, cross check, bearer check, then you will not get any depreciation on that. You will not add in the block. Actual cost is treated as nil. Same way here also in 3580. If at all you're incurring any capital expenditure in a day to a single person more than 10,000 by other than prescribed mode. What is other than prescribed mode? Cash, bearer check, cross check, bearer then it will you no deduction for that capital expenditure at all. Yes or no? No. Conditions. Conditions. It should not be splitting. It is not, the business should be started as completely afresh. It should not be like a demerger from existing business. And in the business, no, you should not use second-hand machinery. Up to 20% only second-hand machinery can be used. You will understand. You will get deduction. Second-hand machinery, new machinery, everything you will get deduction. But second-hand machinery should be only maximum 20% of the total machinery installed in the business. What is not a second-hand machinery? If it is not used in India and no depreciation is claimed in India by anybody on the asset till date, then it is treated as a new machinery. So no, it is imported into India for the first time, and on that machinery nobody claimed depreciation till date. Then only it is treated as what? New machinery. Otherwise, that machinery is treated as second-hand. Second-hand can be there up to how much? 20%. Then there are some conditions. Most important conditions in 3580. Very simple. Now you are incurring capital expenditure, you can claim 100% reduction, right? There is one condition. That I said no. Whatever you are claiming reduction, that asset must be used for scientific research. That asset must be used only for specific business for 8 years. Only for specific business for 8 years you must use it. Sir, I'm not using it, sir. Within 8 years, no, I transferred it to my some other business, sir. See, I'm not talking about sale. I'm not talking about transfer. I'm talking about usage condition. 8 years you must use it for the same specific business. Sir, I'm not using it for 8 years, sir. Some 4th or 5th year, no, I transferred the machinery to my normal business, sir. What is the consequence? Very simple. Earlier given deduction. What is it? Earlier given deduction. Deduction claimed earlier how much? Minus the asset purchase. That is 100% you claim deduction. No? After that, how many 31st March can you see? For number of 31st March, you claim notional depreciation. The balance is treated as income under 3580 subsection 7b. The balance is treated as what? Income under 3580 subsection 7b. This is treated as income. This income is there, right? This income under BGB 28. Sorry, 3580 7b, not 28. 3580 7b is treated as income. Now this income, what is treated? What is taxed as income rate? This amount. The same amount will be added in the block also. Because now we are moving the asset from specific business to block. This is what there in the explanation 13 in the 43.1. This income, what is deemed as income? By the way, we are treating as income. Why we are selling it? No, we are using it from specific business to other purpose within 8 years. Sir, I am using it for other purpose after 8 years, sir. In the block 0. Value added in the block is 0. Retaxability under 3580 subsection 7b 0. Within 8 years, I'm using it for some other purpose. Actual cost, deduction claim how much? Minus notional depreciation for every 31st March. Reduce it and you calculate total notional depreciation. Calculate. So double the value you get. That amount is treated as income under 3580 subsection 7b. Able to understand? Now the same value will be added in the block also in the normal business. Able to understand? Sir, it's not about usage. I sold it, sir. Then you are selling. Suppose I purchased an asset for specific business. 100% reduction claimed. Now I sold it, sir. Whether you are selling within 8 years, after 8 years, the 8 years logic is not applicable for sale. The amount you got, whatever amount you got is straight away taxed under charging section BGB. That's it. Suppose, sir, asset I got for specific business, sir. Within 8 years, I use it for some other purpose. Then income will be taxed. How much income? Deduction allowed earlier minus notional depreciation, that is treated as income under 3580 and the same value will be added in the block. After adding in the block, I sold it, sir. What should I do? Reduce it from the block, because once an asset is one part of block, any subsequent transfer of that particular block, only block of asset treatment will be applicable. That's it. Able to understand? Everybody? Yes. Next. Amortization of preliminary expenditure. 35 is not a big deal. Okay, you can handle on your own. Okay, like very simple. Total preliminary expenditure. Find out total preliminary expenditure. How much is allowed? Sir, I'm a company, sir. My name is a company, sir. 5% of COP, cost of the project, 5% of capital expenditure is higher. Suppose, sir, I spent 10 lakhs money, sir, but cost of the project is only 100 lakhs. Capital price is not 5 lakhs. 5% of it and 5% of it is equal to, which is some 5.2 lakhs is coming, sir. For example, you spend 10 lakhs. Deduction is only for 5.2 lakhs. Maximum preliminary expenditure at 35 cannot exceed 5% of COP, 5% of capital employed, whichever is higher. By the way, you can't claim deduction at any time that amount also. 5 lakhs also you can't claim at any time. You have to claim in 5 installments. Able to understand? What are all preliminary expenditure are given in here? You can look at it. Okay. Now for claiming preliminary expenditure, one most important condition is within 1 month before the due date for filing IT return. By 30th September, nothing but accountant report, chartered accountant report has to be submitted. Even for 3580 capital expenditure reduction, you should give chartered accountant report. Able to understand? Able to recollect everything.
So 3580 so capital expenditure can be claimed for specified business, which is for specified business. What are the others which cannot be claimed? It is for other than any capital expenditure other than land, goodwill and financial instrument. சரியா, இதை asset claim பண்ணிக்கணும். So what if in case such asset should be used in the business for at least 8 years. If before 8 years asset sale ஆயிடுச்சுன்னா, சேல் அசெட் வந்து சேல் ஆயிடுச்சுன்னா அந்த இன்கம் அந்த டிடக்ஷன் மொத்தமாக வந்து டேரெக்டாக வந்து இன்கம்னு சொல்லிட்டு கன்சிடர் ஆகிடும் அந்த இயர்லி. இன்கேஸ் அசெட் வந்து ட்ரான்ஸ்ஃபர் பண்ணுறாங்கன்னா வேறு பிஸ்னஸ் யூஸ் இல்லாமல் இந்த ஸ்பெசிஃபிக் பிஸ்னஸ் யூஸ் இல்லாமல் இதுக்கு ட்ரான்ஸ்ஃபர் பண்ணுறாங்க. ஸோ இன் தட் கேஸ் தட் அசெட் ஃபஸ்ட்டு வந்து எவ்வளோ டிடக்ஷன் மைனஸ் நோஷனல் டெப்ரிசியேஷன் அந்த டிஃபரன்ஸ் அமௌண்ட் வந்து ஃபர்ஸ்ட் இட் வில் பி added to the as an income, and again this income will be added, this amount again will be added to the block of asset. From the block of asset again sale ஆச்சுன்னா அப்போ ஒன்றும் பிரச்சனை இல்லை. இப்போ வந்து டேரக்டாக block of asset எடுத்துருக்காங்க.
I think productive. Yes, next 35 DDA. Sir, SSI, is incurring VRS expenditure, sir. Voluntary. Whatever amount paid under VRS, you can claim deduction in 5 installments. That's it. Other deductions. Sir, I took insurance policy for inventory, sir. You can claim deduction. Sir, I took insurance policy for my employee health benefits, sir. Employee health insurance, you can claim deduction only if it's paid other than cash. Yes or no? Sir, I took insurance on plant and machinery, sir. What about that? It is not covered in 36. It is not covered in 31 also. It is allowed in 37. Because 37 talks about my expenditure. It is related to business. Expenditure must be related to PGBP, business or profession, and it is exclusively used for that, and it must be revenue nature. It is not a personal nature. Business expenditure, not a personal nature. Revenue nature, not covered in the above section. You can claim it under 37. Suppose salary paid by company to the employee. Salary is not covered in the section. 37 you can claim. Electricity expenditure, 37 you can claim. Telephone expenditure, 37. Internet charges, 37. Repairs and maintenance, 37. Repairs and maintenance of plant and machinery, 31. Repairs and maintenance of building, 30. So repairs and maintenance of covered 30 and 31 only. So 37 will not apply. 37 will not apply. Able to understand. That's it. If any of your feeling speed, my revision, reduce the speed, playback speed. That's it. What speed you can reduce in the YouTube? Okay, that's it. I think you're able to understand. I hope I'm not fast. Okay, that's it. Next. Suppose I paid bonus or commission to employees, sir. Yes, yellow as deduction subject to 43B. Bonus or commission is covered under 43B. Sir, interest on loan borrowed, sir. Use it for business or profession. Getting it? Yellow as deduction subject to 43B. Which interest on loan? Banks and FIs and NBFCs. You borrowed loan from banks, FIs and NBFCs for business purpose. Interest income you can claim deduction only subject to 43B. Moreover, suppose if the loan is borrowed for purchasing asset up to the date of put to use the asset as per explanation 8 to 43 subsection 1 up to the date of put to use the asset, you should add it to the block. That's it. Then zero coupon bonds. Getting it? Zero coupon bonds means what? Zero coupon bonds, what you can claim? Discount amount you can claim deduction on pro rata basis. Discount amount you can claim deduction on pro rata basis. What is discount amount? Maturity amount, how much you have to pay? Now how much at what price you issue the bond? Sir, maturity amount, no, sir. Approximately 12 lakhs have to pay, sir. 12 lakhs have to pay, sir. You know, right now I have issued the bond at 10 lakhs, sir. So 2 lakhs, sir. 2 lakhs is the per bond discount, sir. 2 lakhs per bond. How much is the discount? 2 lakhs. You know, this bond duration is 200 months. This bond duration is how many months? 200 months. Per month deduction is how much? 1000 rupees. In the current year, the bond is issued on 1st October 2024. Then for 6 months into 1000, 6000 you can claim deduction. Next year, 12 months, 12,000 you can claim deduction. That next year, 12,000. Again in the last year, no, the bond. 6 months only is there in the financial year. 6 months into 1000. Simple. Per month 1000. In this year, bond is in existence in this year. How many months? That many months into that much. Able to understand? So discount divided by number of months you should identify. So you will get a pro rata basis. Able to understand? Next. Then you remember contribution to welfare funds. Employer, no, he's contributing to RPF, superannuation fund. Employer is contributing to RPF and superannuation fund within prescribed limits. That amount is allowed as deduction. How much of employer contributed, that much amount is allowed as deduction. Subject to 43B. Contribution towards national pension scheme, sir, is also allowed as deduction. How much maximum deduction here? Limit is there. 14% of salary. Salary means what? Basic plus DF for retirement benefits. Able to understand? Then, sir, employer, no, he's contributing to gratuity funds, sir. Approved gratuity funds is contributing. Subject to 43B. Sir, 5A. What is this 5A?
இங்கே வந்து 14% ஃபார் சேலரி பேசிக் ப்ளஸ் டிஏ வந்து இதே சேலரியில் பார்க்கும்போது 12% இருக்குல்ல, அப் டு 12% வந்து ஐவா டிடக்ஷன் எடுத்துக்கிறோம். ஓகே ஃபைன்.
Then you remember contribution to welfare funds. Employer, no, he's contributing to RPF, superannuation fund. Employer is contributing to RPF and superannuation fund within prescribed limits. That amount is allowed as deduction. How much of employer contribution, that much amount is allowed as deduction. Subject to 43B. Contribution towards national pension scheme, sir, is also allowed as deduction. How much maximum deduction here? Limit is there. 14% of salary. Salary means what? Basic plus DF for retirement benefits. Able to understand? Then, sir, employer, no, he's contributing to gratuity fund, sir. Approved gratuity fund is contributing. Subject to 43B. Sir, 5A. What is this 5A? You know, I collected from employee contribution, sir, not my employee. First treated as income. First treated as income under 2 subsection 24. You paid to the respective statutory authority within due date under that law, claimed as deduction under 35. 36 subsection 1 clause 5A. Getting it? So deduction is allowed under this section if employee contribution is remitted to respective fund within the due date prescribed under the respective law. Remember, employee contribution collected by employers and first treated as income. 43B will not apply on this because this is not your contribution, this is employee contribution. Again in 43B, I give a comparison table purpose. Again in 43B, I give a comparison table purpose. Bad debts. Very simple. You sold goods on credit. You showed it as income. You showed income in the PGBP on accrual basis. You paid tax also. Subsequent year, no, the amount is not recoverable. You wrote off in the books. Or the amount became irrecoverable. Either you wrote off or it became irrecoverable. As the case may be, that amount you showed as income in the PGBP, right? You can claim it as deduction in the subsequent year. Able to understand? Sometimes no, sir, I claim deduction, sir. 10 lakhs I claim deduction in PGBP, sir. But the assessing officer, no, opened my case. He allowed only 5 lakhs deduction, sir. 5 lakhs only he allowed deduction, sir. How much is allowed? 5 lakh. Getting it? Which means, sir, my bad debt is 10 lakhs. I sold goods for 10 lakhs. My bad debt is 10 lakhs. Many faculties, I'm telling you, many books are having wrong provision on this. Many books are containing wrong way. Getting it? So, suppose bad debt amount is 10 lakhs. Bad debt claim is 5 lakhs. What? That question itself is wrong. If bad debt is 10 lakh, you will also claim how much? 10 lakh. If the assessing officer does not allow entire 10 lakh, that is what the provision is about. You know, there is a section in the bad debt 36 subsection 2. Inside that there is a clause number 3. This talks about assessing officer involvement. Even ICA book does not have this point. Getting it? This is actual meaning. Suppose, sir, I sold goods on credit for 10 lakhs. The customer is not paying at all. That entire 10 lakhs I showed it as bad debt, sir. In my books I showed it as bad debt. In income tax also I claimed 10 lakhs. But you know what? Assessing officer did not allow. Assessing officer did not allow full 10 lakh. He allowed only 5 lakhs, sir. 5 lakhs only claims ultimately. Actually, 10 lakhs is still well I showed, but 5 lakhs reduction I claim. Net amount is still how much income I showed to the department 5. Subsequently, I collected luckily 5 lakhs, sir. I already showed originally minus 5. 5 only I showed. Finally I collected 5 only. Nothing is taxable. Suppose I collected 7 lakhs, sir. Till now, originally I showed 10. Second year I claimed bad debts 10. But assessing officer only 5, right? So net amount claimed is how much? Only 5. Now I recovered 7. 2 lakhs is treated as business income. Sir, I recover 10, sir, 5 lakhs interest income. Suppose I recover 11 lakhs, sir, including interest, sir, then 6 lakhs. Sir, suppose you know what? Ultimately, I recovered only 4 lakhs, sir. Originally, I showed 10 lakhs income, sir. Entire 10 lakhs is bad, sir. Second year, I claimed 10 lakhs bad, sir. But the assessing officer permitted only 5 lakhs, sir. Indirectly, 10 minus 5, 5 lakhs income I showed, sir. But you know, ultimately, I collected only 4 lakhs. Now the customer is insolvent. I don't even get fund extra. I showed 5 lakhs income in net effect already, sir, but I recovered only 4 lakhs now, sir. That 1 lakh which you showed extra income, no, is allowed as additional deduction. This illustration, if you understand bad debts, you understood it. You know, here indirectly, what am I covering? You know, 41 subsection 4, recovery of bad debt also I'm covering. Recovery. So how much is taxable? Recovery of bad debt is taxable. Recovery of bad debt is taxable to the extent the deduction allowed earlier. Deduction allowed earlier means what? Sir, bad debt claimed. Bad debt claimed how much? 10 lakhs, sir. Deduction allowed by AO is how much? 5 lakhs, sir. How much is not allowed, sir? 5 lakhs, sir. To this extent only recovery is taxable. Able to understand? Yes or no? That's it. Then family planning expenditure. Only company SSC can claim deduction. Only company SSC can claim deduction. This family planning expenditure is again broadly classified into 2 types: revenue, capital. Capital expenditure is also eligible for 100%. Revenue is also eligible for 100%. If you purchase any asset for family planning, that asset will not form 10 lakhs, sir.
Yeah, patent amount is taxable under business version.
Deduction allowed by AO is how much? 5 lakhs, sir. How much is not allowed, sir? 5 lakhs, sir. To this extent only recovery is taxable. Able to understand? Yes or no? That's it. Then family planning expenditure. Only company SSC can claim deduction. Only company SSC can claim deduction. This family planning expenditure is again broadly classified into 2 types: revenue, capital. Capital expenditure is also eligible for 100%. Revenue is also eligible for 100%. If you purchase any asset for family planning, that asset will not form part of the block of assets. Remember. Now, what is capital expenditure in family planning? You constructed some small hospital. You constructed some, you recruited some medical equipment. All that. A company, normal manufacturing company, recruited some medical equipment. What is capital expenditure? Revenue expenditure means treatment cost. That's revenue expenditure. Revenue expenditure 100% will be. Capital expenditure also is again 100%. But capital expenditure is subject to unabsorbed depreciation rules and all. Scientific research capital expenditure is there, right? That is also subject to unabsorbed depreciation rules. Specified business 35 AE capital expenditure is there, right? That is also something subject to the unabsorbed depreciation rules. These are all similar to unabsorbed depreciation rules. What is unabsorbed depreciation rule? All that we will discuss in set of carry forward chapter. Able to understand? Next. Next, you know, suppose I'm doing stock market or commodity market. STT paid, CTT paid. Remember, there is a capital gains chapter. STT paid is not deduction. No deduction at all in capital gains. Capital, but in BGP it is not like that. If it is a stock paid for you, STT paid is allowed as deduction. Finally, sir, there are so many other expenses which are incurred in business, like salary, salary expenditure, office maintenance, telephone expenses, fiber net, like internet charges, so many paper cost, printing and stationery, so many expenses incurred, fuel. Where I can claim deduction? You can claim deduction section 37. Only one condition: it must be incurred after the business is set up. It must not be related to personal, or it should not be capital. Expenditure is exclusively for the business. It is not covered under 32, 37. Remember, in BGP, no deduction for provisions and reserves. You will get deduction in BGP for an expenditure only if it is a real expenditure. You create provision, you don't get deduction. You create reserve, you don't get deduction. Then further, CSR expenditure, company will spend CSR activity expenditure, right? That's your personal obligation. That is not related to business. You will not get any deduction. Further, there is a section called 35 subsection 2b. Sir, I am incurring an expenditure, sir, which is actually advertisement cost in a newspaper, sir. That newspaper pamphlet browser, no, it is published by political party, sir. It is not treated as a business expenditure. It is treated as a donation. No deduction under PGBP. For companies under 80 GGB, the same amount is given as donation. The same amount can be claimed as deduction towards donation. Able to understand? That's it. All the deductions are over. All the deductions are over. Hardly 1 hour 15 minutes. We completed all the deductions. Getting it? Yes. 2 minutes gap will take and limited start disallowance. Confident until now? Disallowance until another 45 minutes to 1 hour. Over. Okay. Now let's begin disallowance sections. Let's. Continue disallowance sections provision. Okay, see, we have very many disallowances. For example, what are the sections that we have? We have section 40A subsection 1, 40A subsection 1A, and we have 40 subsection B, which is actually applicable for firms or LLPs. Then we have something called 40A subsection 2, 40A subsection 3, 40A subsection 3A, 40A subsection 5, 40A subsection 7, 40A subsection 9. Actually 5 we don't have, we only have 7 and 9. Just a minute. We only have 7 and 9. Okay, that's it. Then we have 43B. We have something called 43B. Now, if you observe these sections, these two sections, getting it, 40A1, 40A1A, 43B. In these, no, that the deduction of expenditure is linked with 139 subsection 1 due date predominantly. If at all you do not pay, suppose in 43B there is clause H MSME that is linked with the due date under MSME Act. Okay, by the way, in these two sections, no, in these three sections, no, if an expenditure is disallowed, it is not permanently disallowed. In this year it is disallowed. Later, when you once again comply with the section, no, you will get once again a deduction. Whatever is disallowed, no, you will once again get a deduction later. So it is like a temporary disallowance. Whereas disallowance under 40B, Disallowance under 48 series. This is a permanent disallowance. Permanent means what? For example, there is a section called 48(2). Any amount paid as expenditure to related person. If the unreasonable portion is there, that is fully disallowed. Will it be given as deduction later on again? No. 48(3). It is talking about revenue expenditure claimed to be deduction on if at all amount paid in other than prescribed mode. Other than prescribed mode means cash all that more than 10,000. So that one is 48(3). 48(3) is talking about treating as income, deeming as income. We'll come back to it. 47 is saying provision for gratuity all that. You will not get deduction for provision. You will get deduction only if it is funded gratuity, only if you really pay it. Or if the gratuity actually becomes payable in the current year. 48(9). This is talking about contribution to unrecognized funds. Suppose the employee is contributing to unrecognized funds in the name of employee, no deduction at all. Actually, this deduction is over. This deduction is over. Simple. 48(7) is talking about contribution to provision for gratuity, no deduction. If you contribute to gratuity fund really the amount subject to 43(b), you will get a deduction. Gratuity becomes payable in the current year. You have to pay. Accrual basis you recognize, you will get deduction. Provision for gratuity which will be paid some year later, no deduction. 48(9). Any contribution to unrecognized funds, no deduction at all. 48(2). 48(2). Payment to, what is this 48(2) is about? Payment to related persons. Any revenue expenditure, obviously capital expenditure can't deduction. That's the reason. Revenue expenditures which are covered under section 32, 37, any payment made to related person. Deduction will be allowed only for the reasonable portion. If the amount is unreasonable, no deduction at all. Who is a related person? Who is a related person? I have given simplest way the definition. Who is a related person? You see, for individual, relative. Relative means what? Spouse, brother, sister, any ascendant or descendant. In January exam, no, amount is paid to aunt. Some point is given, which is not covered under relative definition. In the Jan 25 exam. Now, will the section be applied or not is the question. Intention of the section you understand. It's to related person. Yes or no? Maybe the examiner might consider two options. They may absolutely interpret this definition of relative and say since it is not covered under relative, no disallowance. Or they may apply the intention of the section. We don't know what is adjustment answer looks like. Getting it? Fine. Suppose expenditure is paid to entities, not to the individuals. Not to the individual, paid to entities. You know, I am a business person individual. I am paying expenditure to another individual. Who is my relative? Unreasonable portion. I am paying money to some enterprise in which myself or my relative has substantial interest. That is also covered under related person. For companies and HFs and firms, very simple. Directors for companies, you know, and partners for the firms, members for HF, members for AOP, and their relatives. They're all covered under related persons. So for company, directors and relatives. For firm, partners and relatives. For AOP, members and relatives. For HF, members and relatives. They're all related persons. Not only them. Entities in which these directors, partners, and their relatives has substantial interest. They're also related persons. Very simple. 40 years section 2. If you are paying to related person, yes sir. Unreasonable portion is there, yes sir. Assessing officer can be low. Able to understand. Over 48 is over. Substantial interest means what? Minimum 20% voting power in case of companies. Other entities, minimum 20% profit sharing ratio. Then only called as what? Substantial interest. That is 48 2. Able to understand. Now, permanent disallowance I'm discussing first. Then finally I'll come to temporary disallowance. 40 years subsection 1, non 40 years subsection 1. Payment to non-resident, payment to non-resident without deduction of TDS and all. I will discuss it last. Just now. Okay. Now, payments paid in cash. Sir, there is an expenditure, sir, which is actually eligible to be claimed under 30 to 37. By the way, I will also talk about how the disallowance mechanism works. How to compute the problem when P&L account is given. How to compute the problem when restricted payments account is given. I will give you one technique. If you follow the technique I'm telling you, you will get fantastic clarity. Okay. Fine. So 48(3). Sir, I'm incurring some expenditure, sir. Revenue expenditure. I can claim it under 30 to 37, sir. But you know that amount is paid exceeding 10,000 in a day to a person. In a single day to a single person. If at all you are paying any expenditure more than 10,000 by other than prescribed modes. Prescribed modes are what? Account paycheck, account paycheck, electronic purpose. Getting it? Account paycheck. Remember, cross check is not covered. Direct check is not covered. Direct draft is not covered. Cash is not covered. Suppose if at all you are paying any expenditure for more than 10,000 in a day to a single person by cash, by direct check, by cross check, or
Cash, barrel check,
by direct draft, more than 10,000.
barrel draft.
Fully disallowed, no deduction at all. That expenditure is not considered under PGBP. If it is already debited to P&L account, to the net profit you will add back. Suppose if this information is not debited in P&L at all, it is not recorded in books of accounts, it is given as additional information. Some expenditure is missed to be recorded in business. Some expenditure is forgot to record in the PGBP. But the expenditure is paid in cash more than 10,000. You don't get deduction. It's already not recorded, and you don't get deduction. You ignore. You understand? Yes. You know, there is another section called 48(3)(a). In the recent September 2024 exam, this fantastic adjustment was asked. Suppose no, we all know expenditure can be claimed as deduction on accrual basis, right? April to March, I incurred expenditure. I can claim. Only 43 items I must pay within 139 subsection due date. Remaining expense I can claim on accrual. By 31st March, whatever expense I incurred, no, I can claim on accrual. But you know, in the next year, no, April or May or June, some month later on, that amount was paid by me in cash. That amount was paid by me in cash. Very simple. I incurred in previous year 24-25 some expenditure which is 20,000 in 20,000 on accrual basis I claim. But in 25-26 or some other year, whatever year, this entire 20,000 I paid in cash. What is the tax treatment? For 24-25 no problem. You claim deduction on accrual. No disallowance for that. Whereas in 25-26, 27, 28, 28, whenever that amount is paid in cash, that year it is treated as income because you violated payment in other than prescribed modes. Getting it? So you violated that provision. So it is treated as income. So any expenditure which is allowed as deduction on accrual basis in the past year and the same is paid in the subsequent year in other than prescribed mode, then it will be treated as income. Now this amount is 10,000 limit, right? Suppose if you are making payment to a transporter, then the limit is increased to 35,000. In case it's payment to transporter, the limit is increased to 35,000. That's it. Now this disallowance will not attract on repayment of loan. This disallowance will not attract on between transactions between principal and agent because transactions between principal and agent, no, there is no expenditure involved. Simple logic. Now if there are some exemptions from 48 applicability. Suppose if you are making payment to cultivator or producer, getting it? Not a trader in fish. Getting it? Payment to cultivator or producer, no disallowance. You are making payment you know, for purchase of products, no, where they are not manufactured, where they are manufactured without aid of power. Through them you made payment more than 10,000, no problem at all. In cash. Payments to government not covered. Payments of book agent is not covered. Payment made on a bank holiday exempted. Able to understand. That's it. Okay, 48 is over. That's it. 48 section is over. 48 is over. 43 is also over. Now you see, I completed 42, 43, 43, 47, 49. We are only left with what? 3 more sections. 41, 41A, 43B, and 40D. That's it. So hardly another half an hour. This particular deductions will be over. Can I proceed? Now there is a section called 43B. There is a section called 43B.
ஊரார் ஒதுக்கி வச்ச போய் திட்டு வந்துருவோமா? என்னாலும் தாண்டி